On that note, we get in our technical experts for the day. First, let's get in Manav Chopra of Indiabulls Ventures, who's joining us on the show. Manav, good afternoon, and thank you for taking the time out. How are you seeing trade now? Is this just a break in, which is otherwise an up move for the benchmark indices, or is this a matter of concern considering we are looking at a 150-point cut on the Nifty?
See, talking on the medium-term perspective, the markets are likely to be in a broader range whereby 10,900 would be the upper resistance and 10,600 would be the lower support. So this is a broader 300 points range where the Nifty index is likely to trade in the near term. And there was a clear exhaustion pattern that we have witnessed in around 10,900, and eventually for a near term, there is a chance that, like you said, there could be another 100-150 points decline on the near term. But I sense that that could actually, in the near term perspective, would provide a better opportunity for initiating fresh longs for a medium term or a near term positional view. The overall structure for the markets remain bullish as long as 10,400 is not violated. So, our house view would remain bullish till those levels, and we would look to actually buy Nifty near the support zone. For Bank Nifty particularly, it has formed a higher high which was not found by the Nifty. So, whereby we've seen Bank Nifty having outperformance, and it has been outperforming in the immediate basis. But once for a short-term perspective, yes, since there is a sell-off happening all across, there could be a short-term pause even in the Bank Nifty, but eventually the lower band support for the Bank Nifty would be at 26,700, and I think that could be the important support levels to look out for. For now, I think the structure is looking more on the consolidation part of it rather than there is no change to the structure for both the indices for the near term.
Manav, stock specific wise, what exactly are you recommending for today?
Yes, for the short-term perspective, I have two sell calls. My first call is a sell on Apollo Tyres. Basically, this stock, after a good short-term consolidation, has seen a breakdown from its crucial moving average and the trend line support, and the recent breakdown has also accompanied by above average volumes. I sense in the near-term perspective, this stock would see some sort of a selling pressure in the near term, and as it has breached its crucial support, so on the upside we could see stiff resistance around the levels of 237, which is our stop loss, and we expect lower targets of 210. My other sell would be on SREI Infra. In fact, this stock has been an underperformer and in a bear trend since past 2.5 years, and eventually as the prices see a good pullback rally, I think that is a good risk reward ratio to initiate fresh shorts. Recently, with a good price advance, I think the prices are not able to go beyond the 100 EMA, and it has already formed a bearish patterns with a breakdown on the intraday basis. We recommend a sell into this with a stop loss of 37 and expect lower targets of 31.
Ruchit, since you're here, what's your view on Eicher Motors? How much more can it fall? And are you seeing, Manav, where do you see the bottom for Eicher Motors?
In fact, this stock, has been overall been range bound since past 3.5 to 4 months, and it has seen a breakdown today as it has closed below its, or likely will be mostly closing below its 2100 previous swing low. I sense in the near term we could see a decline towards the next support level, which is around 20,500 to 20,700. But if you ask me for a medium term to long term perspective, the trend for Eicher Motors still remains intact, and 20,500 to 700 would be a range. In case if there is any reversal formations to happen, I think an investor should look to at least get into Eicher Motors at the lower levels.
Okay, well, Manav, hold that thought. I'm going to get in a fundamental voice now. We have Avinash Gorakhshakar of Joinder Capital, who is joining us on the show now. Avinash, good afternoon. Thanks for joining us. What are you making of the market moves right now? Suddenly, there's been a lot of weakness that's creeping up. What's your take?
My sense is, I think, Agam, there's a little bit of global uneasiness. I think we got some news flows in the morning with the Hong Kong markets being significantly down. But I think clearly, overall, I would believe that now in the near term, apart from these global news flows, I think in the next coming week, we are going to see a lot of large, bigger companies reporting Q3 numbers. Right. So I think the market focus will again get back to earnings, and our sense is Q3 should be a lot better than Q2. I think overall there could be some pockets of pain like automobiles or auto components, where the numbers have been pretty weak. But overall, I think sectors like capital goods, infra, cement, or for that reason, even some of the two-wheeler auto component companies which are largely export-oriented, I think you could see better numbers. Overall, I would say that it should be a strong and a good earning season. But overall, this kind of volatility and this kind of ups and downs is nothing unusual. I think probably this offers a good opportunity for investors to actually get into good quality stocks at lower prices.
Right. Okay, well, that's Avinash's take on your markets at this point in time, which according to him, offers an opportunity to get into quality stocks. But we have Ruchit Jain, I believe, now with us from Angel Broking. Ruchit, good afternoon. Thanks for taking the time out. How are you reading cues on the indices now? We've seen a little bit of correction, but the Nifty is now starting to see just a slight recovery. What are you making of these moves?
Yeah, hi, very good afternoon. Well, if I just see the recent historical data of both the Nifty and the Bank Nifty index, then this entire month of December has panned out to be a volatility within a range. Now, when we talk volatility within a range, usually the India VIX does not go up, but indices tend to stay volatile. Now, the December month started around 10,900. It corrected up to 10,350 in the initial first couple of weeks itself. It again went back to 10,900 and again we saw correction towards 10,600 level. Now yesterday's trading session 10,900 to 11,000 range, which has been acting as a resistance throughout the December, again acted as a resistance today. So this entire 10,600 to 11,000, we can say that this 300-400 points range has been established in Nifty index, and markets are likely to stay volatile within this range. Even on the Bank Nifty front, we can see formation of a rising wedge pattern, and usually whenever a wedge pattern is formed, we usually see a volatility within a range itself. So until 10,600 is intact on the Nifty front, I think markets are likely to trade with such volatility. In 10,600 to 11,000, this 400 points range bound activity could continue. Now that is why as of now we are not advising our clients to trade any, to take any directional move or a directional position on the indices front until we see a closing either about 11,000 mark or below 10,600 mark. I think the best strategy over here for short-term traders should be to focus on stock-specific moves, because you can see many stocks which are underperforming the broader market and giving a chance to go on the short side, as well as there are stocks too which are showing some outperformance. So you will get opportunities to trade on both the sides, on the long side as well as on the short side on stock-specific names. But on the index front, 10,600 to 11,000, let the index come beyond this range to take a directional bet.
About Ruchit, people who trading options, if you believe that it will be within this range, any pair trade that can be shorted or bought according to you, because that will be pretty, that will not be as risky as trading the futures on a standalone basis.
So we have that range 10,600, 10,700 on the lower side and 10,900 to 11,000 on the higher side. So if one has to take a limited risk and play through the options, so one can take a strategy to buy call option when the market comes near the lower end of the range, and buy a put option or sell call options when the market comes towards the higher end of the range. Now after today's correction, around 10,750, 10,700 range if we get, then this would be quite close to the lower end of the range that we are talking about. So if one has to take a limited risk through options, then I would recommend that if you get around 10,700 mark, then go long on 10,900 call option and keep a stop loss below 10,600 on the Nifty spot front.
Okay, Ruchit, then let's talk about stocks. You like TCS and you do not like TVS Motor Company. Tell us why.
Yeah, so TVS Motor last few trading sessions was hovering around its 200-day moving average. Now whenever I see a trended move, a 200-day moving average either acts as a support if prices are trading above that, or a resistance if the trend is negative. Now after consolidating near its 200-day moving average, today we have seen the prices have taken a hit of around 5%. There is a rise in open interest which is indicating a formation of fresh short positions. Also on the technical front, a rising trend line has been broken out. So around 540 marks, right now it's trading around 536 on a minor pullback around 540 mark. When I would advise to go short on TVS Motor, keeping stop loss above 559, and on the lower side, the previous supports are placed around 506. So we could see stock testing 506 levels in this expiry. TCS is one of the bet only because if I look at the last few months of data, whenever the stock has come around its key moving averages, it consolidates over there and again tends to show outperformance. As of now, there are no negative signs. Even we see on the options front, we are recommending to go long on 1940 call option, which is right now trading around 57 rupees. So this would limit the risk in case the stock does not move immediately on the upside. One can keep a stop loss below 26 rupees, expecting target around 105.
Okay, we hold on, Ruchit. We'll get in some more stocks. So, what are the stocks that are buzzing in today's trade? Sharad Dubey now joins us with his list. Sharad, which are the buzzing stocks today?
Afternoon, Darshan. The first stock which is buzzing is JSW Steel, which is down by almost 3%, its lowest level seen in the past 5 trading sessions. This is based on the news that CLSA has downgraded it to sell from underform, lowering its target price to rupees 260 from rupees 375, stating that the Indian steel market is on the cusp of multi-year tightening due to insufficient capacity additions. Imports will also rise sharply in the coming year. For FY 2021, they have cut the EBITDA by 20 to 23% and also cut EPS by 35 to 38%. The next stock is Vedanta, which is down by almost 3%, its lowest level seen in 3 weeks after Bloomberg News reported that Tamil Nadu government will move to the Supreme Court to close Vedanta's copper plant. The government has actually filed an application against National Green Tribunal's order that allowed Stellite Copper Unit to restart its copper smelter in Tuticorin. A 2-judge panel of Supreme Court headed by Chief Justice Ranjan Gogoi has not given a date for hearing this plea as of now. Apart from this, the third stock I picked up is TVS Motors, which is down by almost 5% right now. It will be its lowest levels seen since December 11 after a dismal December performance as numbers were coming below expectations, which actual sales coming in at around 2,71,395 units versus expected sales of around 291,000 units. On a year-to-year basis, the sales did go up by 6% from 256,870 units to 2,71,395 units. So these are the 3 stocks, Darshan.
Right, Sharad, thank you for joining us and taking us through the buzzing stocks for the day. But I'm going to talk about and extend the conversation that I was having with Avinash earlier, and he said that there are certain stocks that could be taken advantage of considering we are seeing some amount of weakness in the markets. Of course, one of them that we were talking about was Finolex Industries. It is not down as much as some of your other mid-cap stocks, but and I'm actually looking at its analyst ratings currently, and well, about 80% of the analysts on the street, and we have coverage from 15 analysts on Bloomberg. They actually have a buy call on Finolex Industries, and their cumulative target return potential indicates an 18% upside from current market levels. But I'm going to hand it over to Avinash and ask him why he likes Finolex Industries. Avinash, what's the story here?
No, Agam, I think clearly within the rural pocket, I think Finolex is the only integrated player which has a PVC facility, and then
just hold on, Avinash. I think there's something in the Lok Sabha, and once we'll see that and we'll get back to you. Let's cut across.
On the last occasion, he manufactured a conversation between himself and the French President Macron. The French government officially denied it. He repeats the same falsehood today. Today, he tried to produce a tape or a document which the rules don't permit. He was too scared to authenticate it because he knows that his party manufactured it. And he knows fully well that both the Health Minister of Goa and the Chief Minister of Goa have already said that this is complete fabrication and there must be an inquiry as to how the Congress party manufactured it. I will now list out each of the incorrect and the false, inaccurate statements he has made. The manner in which he takes liberties for the truth is absolutely unprecedented. He says, and this is the case being made out, the procedure is wrong. There was no negotiating committee. There was no contract or price negotiating committee. There was no Defense Acquisition Council. There was no Cabinet Committee on Security. one man decided the transaction. He then says, and this is what I have publicly referred to as an arithmetic which a kindergarten child understands. एक 500 का था जो हम ला रहे थे, जो ये लाए वो 1600 का है. It only shows, and it's a tragedy for this country, that the grand old party of Indian politics, the Congress party, which has in the past been headed by great legends, is today headed by a gentleman who doesn't even have a basic understanding of what a combat aircraft is. And the reason now what I'm going to say next. And I'm not yielding, madam. When they've heard falsehood, they must also hear the truth.
Nothing will go on record like this. Only minister's statement.
आप झूठ सुन सकते हैं, सच्चाई भी तो सुनिए. सच्चाई सुनने में क्यों तकलीफ आ रही है? और इसके पीछे कारण है, ये 500 बनाम 1600 का जो तर्क है, ये बहुत सादगी का तर्क है. और उसका कारण ये है कि इस देश में कुछ लोग और कुछ परिवार ऐसे हैं जिनको पैसे का गणित समझ आता है, देश की सुरक्षा के साथ जुड़े हुए मुद्दे नहीं.
Well, as I was mentioning earlier, the debate continues in Lok Sabha over the Rafale deal, but I'm going to shift focus back to the markets. And we were actually quizzing Avinash on Finolex Industries, and he said he likes the stock. So, Avinash, I'm going to come back to you, and I once again apologize for the interruption. Can you tell us why you like this one?
Yeah, Agam, I think within the rural pocket, Finolex is one of the players which is an integrated play. It makes the PVC and converts it into PVC pipes, and it is one of the largest PVC processing pipe manufacturers in the country. Right. Now, what is important is in the last 2 months, we've seen a 15 to 16% correction in crude prices. Clearly, this is going to be a big earnings driver for Finolex, and most importantly, with the election lined up for the month of May 2019, our sense is that the coming budget would also announce a big boost for rural spending. I think PVC pipes are definitely going to benefit largely from the rural budgets. And secondly, now the GST has come in, I think things have settled down. Almost 25 to 30% of the total industry capacity is unorganized. So there's been a lot of shift from the unorganized players to the private sector players. And our sense is that Finolex with the largest capacity should definitely benefit. We could see a very strong set of numbers not only for Q3, but hopefully with the kind of new orders announced in the budget, FY20 also looks a lot better. So clearly, I think, as you mentioned, many people are also equally positive. Our sense is a price of around 640, 650 looks comfortably possible considering the kind of geographical reach and the kind of capacity advantages and the integration it enjoys. So clearly, this could be a good value pick at this kind of time.
Okay, and the other stock that we wanted to address and discuss with Avinash was Cummins India. Let's pull that one up as well and take a look at what it's doing right now, perhaps what it's done over the last few months. It is, trending at around 844 odd. Avinash, what's behind this one? Yeah.
Now again, Agam, within the higher HP segment, I think Cummins definitely enjoys a very large market share, and I think clearly looking at the kind of order book and the commentary, we heard from the management, post the Q2 numbers. Our sense is that not only has the guidance been upped, the margin guidance has also been upped by the management. Our sense is that exports could now be closely watched because exports were a very positive feature in Q2 performance. Overall, I would believe that if the infrastructure growth sustains and we see better macro numbers, we could be seeing better numbers not only for Q3 but FY20 also looks a lot better. And I think clearly within the capital goods space, we have seen a lot of companies, management talking very positively about the demand environment. So Cummins definitely fits the bill. Our sense is that after a very long period of stagnation for the last 2 years, probably FY20 should be a lot better.
Are you seeing domestic markets improve for Cummins because exports continue to do well? I think the problem was the domestic markets that didn't do well. Going ahead, what gives you the confidence that that will improve?
I think Darshan, clearly, at least from the management, one could come out, could confidently say that infra and metro, these are two segments where the management is quite positive that this could possibly give a fair amount of boost to their high HP kind of business. And I think clearly, looking at the management commentary after a long period, the guidance on both the top line and margins have improved. I think exports could now be a close factor to watch, considering that the rupee has now actually appreciated. In the previous quarter, the rupee also helped them enhance their margins.
Okay, hold on. We'll come to you with more questions, but it's time for chart of the day. ICICI Bank found itself in the eye of the storm through 2018. One of the two banks identified as too large to fail by the RBI was rocked by whistleblower complaints against its MD and CEO Chanda Kochar, which eventually resulted in her resignation. The new man in charge, Sandeep Bakshi, seems to have impressed analysts tracking the stock through the private lender and making it the most preferred stock. Samit is here with all the details.
So if you see, ICICI Bank, which is India's second largest private lender, is now India's most preferred banking stock for 2019. Exactly 49 analysts now have a buy rating on ICICI Bank, while the buy rate recommendation as a percentage of total analyst recommendation has moved to 96%, its highest since 2014. Now, in the start of the last two calendar years, at 2017 and 2018, HDFC was the most preferred banking stock for those years, and before that it was Axis Bank, and in 2014 it was ICICI Bank, and now again in 2019 ICICI Bank has reclaimed this position after a gap of 4 years. Now, a change in leadership position, strong NPA recoveries and a positive growth outlook have made analysts most bullish on ICICI Bank in the last 4 years.
Okay, many thanks for that, Samit. Vinash, what's your view? Are you recommending your clients to accumulate ICICI Bank, or you think the rally is done now?
No, I think clearly from a slightly medium-term angle, both ICICI Bank as well as Axis Bank, which are corporate lending banks, Darshan should definitely do well. There's been a marked improvement in the asset quality, and hopefully since most of the asset quality write-off has happened, our sense is that FY20 should be a lot better. FY19, the third and the fourth quarter would be watched very closely. I think the second quarter was also much better than what the street expectations were. But overall, I think looking at the price risk reward ratio, I think both ICICI Bank and Axis Bank could definitely be looked upon from a slightly medium-term angle.
Okay, just before we go on, pull up rice stocks. A sudden spike. Kohinoor has surged up 18%. LT Foods is up 6%. So there's something that's come on rice, or probably on Iran. I don't know. But usually they react to news that's either on Iran or rice. So that has managed to spoke. So that's something that I just wanted to point out. And JSW Holding is the other counter I wanted to highlight. That's surged up 18% despite all the Jindal stocks falling in trade. This one is managed to move up. Agam.
Okay, well, I'm actually going to address Tata Motors, because we usually have a lot of queries here, and I'm going to take a technical check here to see whether or not that recovery that some analysts were expecting to sustain, is that still the story? Is that story still intact? And it's currently at about 168. It's largely fallen because of the fact that we've seen weakness in the auto sector. Manav, I'm going to come to you on this one. To your view on Tata Motors, how would you address this?
See, the overall trend for this stock still remains weak, even though the prices are in deep oversold levels. It is also indicating that it is backed by major underperformance. We have not seen any volume confirmation, even though in spite of the recovery that the prices witnessed from its lows of 155 towards 180. So in the near-term perspective, we still expect this underperformance to continue. The only way that the pullback could shape out is if the stock closes above 175, and that could lead to a short-term recovery on the upside towards 190. But overall, I think it's better that if one stays out of the stock unless we see a closing above 175 in the near term.
Okay, well, that's as far as Tata Motors is concerned. We've also had some weakness in some of your metal stocks today, and we've seen downgrades coming from CLSA especially on the counters like Tata Steel, JSW Steel, and Hindalco. I'm going to pull up Tata Steel and stay with the Tata Group right now. So there you go. Tata Steel is actually trading near day's lows. It's down around 3.9% at around 495 odd per share. Ruchit, your view on Tata Steel, what would you do with this one? Buy, sell, or avoid any position here?
Recommend to avoid trading in metals name as of now. No, even if I specifically talk about Tata Steel, Then recently, after breaching its support of 570, whenever there has been pullback, the 20 days moving average has acted as a resistance. And 20 days EMA is just a very short-term support or resistance we generally consider. Even in today's trading session, after a gap down opening, a good follow-up move on the downside has been seen, supported by good volumes. So I think this 480, 485 on the lower side would be support, and on the higher side 530 would be resistance. So unless we see a breakout beyond this range, I would tend to avoid trading Tata Steel.
Yes, Sun Pharma has moved to the highest point of the day and it's moving up. It's bucking the trend as far as some of the Nifty stocks are concerned. Sun Pharma is up almost 1.3% in trade, has managed to move up. And Asian Paints is the other counter, which has now moved into the green and trading at the day's high. So there is traction that's seen on Asian Paints. Vinash, anything in the pharma space that you like and recommending to your clients?
I think within the pharma pack, we like Cadila Healthcare. Our sense is that, clearly in terms of the performance for FY19 as well as for FY20 and most of the, regulatory hurdles out, I would believe that this is one stock which could be definitely be looked upon. In fact, Darshan, you mentioned about Sun Pharma. I would believe that the third quarter could be much better than the Q2 because there was an exceptional write-off, in the Q2, which possibly led to a net loss. But otherwise, obviously, I think the third and the fourth quarter should be much stronger quarters. Hopefully, how the US market pans out and clearly how Halol gets ramped up. I think these would be key factors.
What are you looking out in Cadila? Because the problem is that, despite being regulatory cleared and despite having a lot of launches, the stock somehow has not, it's basically competition in some of the key drugs, but I don't think they've been able to pull themselves up when others were in trouble.
Yeah, I think the only plus point is that they don't have any regulatory hurdles. But as you rightly mentioned, over the last, say, 2 to 3 months, in fact, the stock has actually remained range bound. And I think clearly, they don't have any major kind of, lineup of molecules which could possibly re-rate the stock. So I think clearly one will have to wait for the Q3 numbers. But overall, I don't think you're going to see a kind of a tepid or a negative performance coming in the Q3 or possibly in FY19. So overall, I think it would be better to wait and watch for the earnings and then the management comment going forward.
Okay, Avinash, my question is to do with Asian Paints. Certainly not at 1500 at their lifetime highs, and I'm still looking at valuations which are, well, they've always been at a premium, but they're still considerably higher than even the previous two-year average. We have a lot of questions coming in on our shows asking whether or not this is a good entry point for Asian Paints. What would you tell them?
I think, Agam, clearly, Asian Paints is not a stock where one actually buys for a quarter or two. I would believe that, the markets are pricing in a premium for the growth and the kind of management quality and the balance sheet strength which Asian Paints commands. Right. So I think despite high valuations, I would not be surprised that if crude remains where it is and hopefully, volume growth kicks in, then we could possibly see definitely a further re-rating from these levels. I think anybody who wants to buy should actually buy it in a staggered manner, probably, at the current level and maybe at slightly lower levels, because this is not a stock which possibly one could measure the M2M returns on a quarter-to basis or a 6-monthly basis. Take at least a 18-month time frame. That would definitely give a better risk reward.
Pull up the oil marketing companies. BPCL surprisingly, I think all of them have spiked in this thing. BPCL still remains in the red. IOC is almost into the green. HPCL is almost into the green. So there is some development that's happened as far as crude. I think I am not getting anything, but it has to do with Iran because rice stocks are up. Crude has managed to move up. So I don't know what the connection is, but there certainly seems to be something with relation to Iran, while crude itself is down in trade. So I don't know.
I just want to point out this, general misconception that a lot of investors have with rice crops and Iran. Yes, it is true that there are exports to Iran, but we also have to remember that the last time we made this check, the entire percentage of the exports to Iran for rice companies, especially the ones which are listed in India, is very, very small. In fact, we've spoken to managements and they themselves have also suggested that the impact is not as high, especially given the percentage of revenues is perhaps less than 5% to your total turnover. So, investors must keep that in mind. Avinash, before we let you go, there's a final question on Make Money Organics from one of our viewers here. Do you track this stock and what would you do with this?
I think they operate in the dyes and the pigment space. I would believe that investors who want to buy into this stock should possibly look at the fact that this was a company which came into some sort of corporate governance cloud a couple of months back. So I would believe that unless we see a better kind of clarity, because there was some issue on the subsidiary valuation which the management tried to defend. I would believe, Agam, these kind of companies would take a long time to get re-rated, despite the fact that earnings may look good.
Yeah.
If at all, you want to invest in chemical companies, I think something like a typically, more larger as well as more transparent companies could be, could fit the bill better. But Make Money Organics, my sense is after this corporate governance issue, it's better to actually stay away from the stock.
Okay, many thanks for that, Avinash. And I think the news for why the oil marketing companies. So Reuters has reported indicating that Finman sources to them have indicated that oil marketing companies are allowed to recoup losses, limiting fuel price cuts, and that's the reason the spike in the oil marketing companies did come in. So that's the reason why there's no Iran correction as of now. But it's time to take a short break here on Countdown. On the other side, we'll get you Fab 4 stocks of the day, and at 3:15 we'll tell you what dealing rooms are indicating and recommending some of the closing strategies.
Welcome back. This is Countdown. 26 minutes left to go before markets shut trade. At this point in time, the Nifty has recovered from day's lows and it's now down only 1% as compared to 1.5% about half an hour ago. It's reclaimed 10,800 and well, it's making a little bit of an up move. Can this last for long? That's something we're going to get an answer in within about less than 26 minutes. But with that, we'll move on and get you the Fab 4 stocks of the day. As usual, we have Yash Upadhyay, who joins us with that list. Yash, good afternoon.
Good afternoon, Agam. I'll start with Chambal Fertilizers, and that one was up about 3.5%, holding on to gains in a market like this after the company said that they have started commercial production at one of its urea plants in Andhra Pradesh, which has a total capacity of about 1.34 million tons. So that's up about 4%. Dynamic Technologies was up almost 3.5%. Now this comes after an MK note wherein they have maintained the buy rating and have set a target price of about 2,052 rupees, which indicates an upside of more than 30% from the current levels, as they expect the company's financials to improve with the sale of its aluminum business. Atul Auto follows up on its big move of yesterday, up 3.5% in today's day of trade as well. It was locked in an upper circuit of 20% yesterday after reporting a 50% jump in its auto sales for the month of December. So watch out for that. And Indiabulls Ventures has been on an upswing. It's up about 2.5% today, as well as been gaining for the last 5 trading sessions, up nearly 9.5% in that period, with volumes too coming in significantly higher. Back to you.
Okay, thanks so much for that, Yash. Siddharth Sidani of Anand Rathi is joining us on the show. Good afternoon, Siddharth. What exactly are you making of the market? What are you recommending your clients? What are you telling them what to do at this point of time?
Good afternoon. Well, at the current state of the market, of course, markets are quite volatile because we don't have much of events or triggers in front of us, just the result season from next week. I think that would be a key trigger point for us. Apart from that, of course, the international news flows are quite important, and the kind of volatility we've been seeing in the US markets also, I think that is also playing a spoil sport in global equity markets as well as India. However, at the current situation, it is very plain, vanilla, simple suggestions which we are giving to our investors, that currently it's the time to buy. In coming 2, 3, 4 months till the elections, we are approaching towards the election, I think it is best time to accumulate good quality companies wherever you are getting a chance of lower levels to buy or accumulate, or in a staggered manner. I think this is the best time to do it, because we have done a study that whoever has invested in the before the elections, 6 months before the elections, prior to elections, the next post elections, one has always got a return to the tune of 8% positive, to the tune of 35%. So there is always a good opportunity to buy at the current levels in next 3 to 4 months.
Okay, Siddharth, but there is a matter of concern with respect to the auto sector. The trends certainly aren't encouraging when it comes to December. And well, of course, some of the stocks out here in the markets are getting pummeled. Case in point, Well, something like an Eicher Motors, of course, that's the biggest loser in today's day of trade. But we've also seen, a lot of negative commentary coming in on something like a TVS Motor Company or Hero Motor Corp. So let's stick with two-wheelers now, Siddharth. How are you going about this segment right now?
Well, there are a lot of things attached to it, attributed to it. To begin with, of course, the insurance part will definitely hit the sales of two-wheelers. Apart from that, the demand slowdown and the kind of sluggishness we've seen in the festive season, I think that is also been reflected in the price. And overall, demand scenario is not coming up. In fact, the Bajaj numbers were also not that exciting, and in fact, the coming month also, we may not expect that great set of numbers. So most of the two-wheeler space is definitely struggling, so we are not looking for or recommending any of the two-wheeler stocks to our investors. In fact, we believe that relatively compared to two-wheeler, I think passenger vehicle will be doing little better than what two-wheeler has done. On one count, of course, passenger vehicle is also going through a rough patch at the current state. But having said that, I think next year, I think Feb, March onwards, I think for a passenger vehicle again will start a better sales going forward. Let's not forget a caveat: if government cuts the GST on the two-wheeler, I think there can be seen some kind of attraction in the auto entire OEM space. So let's wait out for that and how things pan out.
What are you recommending your clients? Which are the sectors and stocks that you're recommending currently?
So it's a no-brainer. We are heading towards elections, so consumption will be a no-brainer. And amongst consumption, what we like is some of the FMCG plays like Hindustan Unilever, some of the consumer plays like Asian Paints, where there was a little bit of a hit in terms of tepidness in terms of results last quarter. But I think this quarter they will be posting good set of numbers on the back of rise in product prices to the tune of 2.5%. Along with that, fall in crude oil prices will be definitely a strong tailwind for the company. So Asian Paint kind of a consumption story which we are pushing through. In private sector banks also, we like something like HDFC Bank or IndusInd Bank for that matter, with a medium to long term perspective. I think I would like to go on play safe in this category rather than looking out and hunting out for some PSU space which is buzzing today. But you never know, again some set of disappointments in the result will again attract some 20-25% fall in the stock price. So I would like to go with the safer stories in the private banking space. Along with that, some of the auto ancillary plays like Sundaram Fasteners, which caters to most of the OEM segments, although slowdown to the OEM is definitely impacting these companies also. But I think eventually these companies like Sundaram Fastener, strong parentage, capex already been done. I think these companies will be doing fairly good with a medium to long term perspective.
Okay, well, a handful of queries on Ashok Leyland, and we already have spoken about extensively about the auto sales. So I'm going to do a technical check here. Let me take this one up with Manav. Manav, what we've seen in Ashok Leyland is now it's lost the mark of 100. It's trading below that level. Your view in the short term, what would you do with this? Would you short at these levels, or do you actually think that this is not a bad time to buy into Ashok Leyland? What's your view here?
Actually, the stock has already declined from its recent peak of 122 few weeks back, and currently in such deep oversold levels doesn't make any sense, or does not even provide any risk reward for fresh shorts. The immediate support for Ashok Leyland would be around 96 to 97, which is its recent swing low that the prices formed in December. So I will very closely watch onto these levels, and in case if the prices are managing to those support zone, a possible pullback again to 105, 108. So one can only initiate long positions for a very short-term perspective for a pullback rally, since it's in deep oversold levels. But I don't see any medium-term trend reversal or any such signals so far. So it's just a short-term trading bounce that could be played if the 96 to 97 support levels are held.
Ruchit, what's your view on Sun Pharma? It's trading at the highest point of the day in a market where the Nifty is down 120 points. Sun Pharma has managed to come up.
So if we see last 2.5 months, the trend for the stock has been negative. In fact, even within the pharma space, if we do some comparative analysis, then this has been one of the stock which has shown significant correction. Now I think this up move which we are seeing today is just a pullback move within a corrective trend. If I just see the recent historical data in the month of December, and during the first week of December we had seen a huge gap down opening on 3rd of December in Sun Pharma, and that gap was around 460 470 range. Usually such breakdown gaps tends to act as resistance on pullback move. So I would take this up move is just a pullback move which could extend towards 460 or 465. But I think in case if whenever the stock comes around 460, 465, it would be good opportunity to exit from long positions if any.
Okay, Ruchit, come in on JSW Steel as well, because that has also been under pressure for fundamental reasons and downgrades that we have been highlighting. It's now down around 4.5% at 290. What would you do with this one, Ruchit, JSW Steel?
So today, most of the metal names have been correcting, and if you see JSW Steel, then 286 is one of the support level which has acted as a support at least twice or thrice in last few days. So 286 would be the crucial level to watch. In case if the stock breaks below 286 in tomorrow's trading session, then we could see this correction extending towards 271, 269 kind of range. So if any existing long positions are there, then keep a strict stop loss below 286, and if one has to take any fresh positions, then below 286 one can even initiate fresh shorts from a short-term perspective.
Okay, that's the view that's coming in. And Manav, any view on Escorts? One of the very few auto companies that managed to move up. Today it's down in trade. What should one do on Escorts, given that most of the others are down in trade? Do you see a similar state happening for Escorts, or will this be an outperformer?
Actually, this Escort has seen already a good move from its recent lows of 585, currently facing resistance around 520 to 530 on the upside, which was its previous swing also in the end of November, December that we've seen. And most importantly, since it has already rallied, I sense one can look to book profits if holding long positions. The short-term support for Escorts would be at 685 to 690 on the lower side. Only once if these levels are breached, you could see a short-term correction coming to the stock. But at the moment, I don't see any new trades that can be initiated purely on the risk-reward ratio, and one can just book some profits if already holding long positions.
Okay, considering we have seen so much weakness in a lot of these metal counters, perhaps largely to do with the anticipated weakness in softening commodity prices in China because of deteriorating demand. I'm going to take this question up with Siddharth as well on a fundamental basis. Siddharth, how are you watching the ferrous side of metals, specifically something like a Tata Steel or a JSW Steel or perhaps even Jindal Steel and Power? How would you go about advising your clients on this particular sector?
Well, on the steel front, we believe that there is definitely pressure which has been mounted because of fall in demand globally, as well as the fall in prices in China especially. But what I anticipate in this space is JSW Steel is cut above the rest, and we are recommending our investors to buy this story, but with a 2-year perspective and not with a short-term perspective, because of two reasons. One is of course the capacity expansion which this company has, and second, realizations will be better on the domestic front, especially for JSW Steel. Now, steel as an industry globally has not been advised as of now, but why we are positive on the domestic steel producers is because of the government policies, and we still believe that government will be little protectionist in terms of keeping their steel industry going. And of course, needless to say that there is a lot of infra growth which will be in the fag end of the year, which will definitely attract steel and cement demand overall. So JSW Steel is the only pick which we are coming out, which we are believing to recommend to our investors.
All right, well, hold that thought, guys. It's 3:15, so it's that time of the day when we get you a dealing room check of what they're recommending to their clients, and Darshan is here with us to take us through the same. Darshan?
Yeah, so 3 stocks, at least all on the large cap front. Escorts is the first stock that dealers are talking about. There is selling pressure that's coming in from the higher levels in trade today. Now remember, when most of the auto companies came out with a weak set of numbers, Escorts did manage to surprise, but look at the base that Escorts has compared to an M&M. So M&M has corrected significantly across the board. There is pain in the sector. So there is selling pressure that is likely to come in on Escorts, as something that dealers are talking about. The next one is Sun Pharma, which is trading at the highest point of the day. There is a buzz of a potential buyback that the company could announce, and that's keeping the stock price abuzz in today's trade. And the final stock is Asian Paints, which seems to be doing well, trading at the highest point of the day. Some of the domestic mutual funds are active accumulators of Asian Paints. That's what's been heard.
Right, Darshan, thanks for getting us that dealing room check. So keep an eye on that one. And I'm going to go back to Siddharth on the private sector banking space. Siddharth, we just ran a check about the Bloomberg consensus, and it has so emerged that after 2 straight years where HDFC Bank was the most preferred bank in the private sector, it's now ICICI Bank, at least as far as the number of analysts with the buy ratings on private banks go. How are you placed in the private sector banking space, and what would be your top bet or a top couple of bets in the private sector?
Well, there is no doubt about ICICI's performance. Historically, it has improved the performance, and I think the consensus is going fairly well over ICICI Bank. But we have a different view altogether. Although ICICI Bank historical performances, we've seen improvement in last few quarters. But again, some of the class action suits which are filed in US, I think this can be a potential problem creator for the company going forward. For that matter only, we want to stay with the steady ship of the industry, that is HDFC Bank. Although there are a lot of hiccups in the retail side of the banking space, which I have been listening, but still we believe IndusInd Bank, HDFC Bank kind of companies are which we are betting on, rather than looking at corporate-facing banks like ICICI. Although corporate-facing banks like ICICI, Axis, SBI has been really in the flavor since 3 to 6 months. But still, we believe that one should go with the steady ship rather than going very aggressive.
All right. Well, I'm going to actually take this moment to address all the Bloomberg Edge picks that we've made today. And I'm going to start off with perhaps Aditya Birla Fashion, if I'm not mistaken. That's the one that our colleague Yash Upadhyay had brought in earlier today, and he had suggested, according to the charts, where there was some amount of weakness that was expected. And well, actually, not only is it down, but it's actually down by as much as nearly 2% in trade right now. I'm going to take a chart check here. It's currently at around 196. Ruchit, if I can come to you on AB Fashion, Aditya Birla Fashion, what kind of trend are you reading here on this one? And do you see more weakness?
I think more or less, if we compare this stock within the mid-cap space, then this stock has shown some outperformance in last few months. Initially, during the start of July, August, the stock prices were trading around 140, which rallied up to 210, and then a broad consolidation phase has been seen. So this entire consolidation now just seemed to be a time-wise correction. On dips around 188, 190, there could be good support for the stock where one could initiate fresh longs, keeping stock below 170 kind of range. And on the high side, we could see levels around 220, 230 again coming in the stock. But the only caveat is that one needs to give enough time for this stock, because as of now the volumes are not very high and the stock is still in a consolidation phase. So the strategy should be to buy whenever the stock comes near the lower end of this consolidation phase. So 180, 185 would be the good range to accumulate this stock.
Okay, let's get in the closing strategies. Manav, you first. What are the closing strategies that you're recommending for today?
Yes, I have a sell on idea. In fact, the prices, after facing stiff resistance around the levels of 37, 38, has breached its intraday support zone, and it has been in an overall downtrend. So the risk reward ratio is quite favorable. A sell with a stop of 37.50 for lower targets of 35 and 34. My other call would be a buy on Asian Paints. Basically, the stock has been a good outperformer, and after a good sideways consolidation, a breakout on the intraday charts could see some fresh momentum going forward, and the oscillators have also entered into a buy mode today. It can be a short-term BTST buy with a stop of 1360 for an upside target of 1400.
Okay, and Richard, what about you? Your closing thoughts or anything that stands out for you in terms of BTST or STBT?
So I'll take a contra call and recommend a buy in IGL. If I see this stock, in spite of the falling markets, this stock has been showing an outperformance today, and the prices are trading with the gains of about 1%. Also, last two trading sessions, if we focus on the volumes, then the volumes have been quite good. So these are all signs of accumulation. Prices have also breached above its 200-day moving average. So from a BTST perspective, one can go long on IGL at current levels, keeping stop below 268 and expect target around 286 to 288.
Okay, let's highlight some of the stocks that are making news. Eicher Motors is down almost in double digits now. It's down over 9%. And the other one is Jet Airways, a big drop. Jet Airways is also down significantly, 7%. If you take the futures of Jet Airways, that's down 10% now because that's trading at a discount, I believe. So there is that's trading at a discount of almost 10 rupees. So the futures is down 10% in trade. So there is traction that's happening. Again, TVS Motors is another counter which is dropped to 6% in trade. So very, very few counters. The two exceptions seem to be BEL and BEML, and both of them are gaining on decent open interest. So the defense play is something that I think there is a little bit of interest that is there. The oil marketing company is still managing to hold on to the gains that they had compared to the losses that they had in morning trade. So that's the trend that we are seeing at this point of time.
Okay, well, I'm going to take up maybe one or two more stocks or perhaps sectors with Siddharth. Siddharth, I wanted to address Quest Corp and compare it to Team Lease, and you can tell if either of these stocks is in your coverage. How are you reading cues here? Because over the last 3 or 4 months, Quest Corp has clearly underperformed Team Lease. What's the reason behind that? If you could tell us about how you are reading both these stocks and where your preference lies here.
Well, unfortunately, we don't cover either of the stock. It would be difficult for me to comment on any of them.
Okay, no worries, Siddharth. In that case, come in on the mid-cap stocks, because that is the other question that I had for you. So while there is a lot of preference and there's a lot of buzz around TCS and Infosys right now because of the upcoming earnings coming through, how are you reading the mid-cap space, and what is it that stands out for you in the mid-cap arena?
Well, we are very positive and constructive over IT mid-cap space, and not from today. Since last 4 quarters we've been recommending, and we've been very successful in recommending stocks like Mindtree, or for that matter Sonata Software. Of late, one of the stock, which is L&T Technology, which we've been recommending last 2 quarters, has been really performing good, and in fact the last quarter results were fantastic with 30% constant currency growth. So L&T Technology is one of the stocks which we are recommending. We believe that over 2000 can be the target of the stock. We expect a strong set of numbers, and see what happens is other IT companies are very generic in nature. There you may see a lot of volatility because of currency fluctuations, so on and so forth. But companies which are specific in nature in terms of their businesses, like L&T Technology, which is more focused towards transportation, and many other sectors followed through, I think these companies will be, specific companies will be really performing well and deliverable well, and beating hands down the large cap IT performances.
Okay, Siddharth, we leave it at that. Many thanks for joining us and giving us this perspective on Bloomberg Quint.
Thank you.
Thank you. Okay, 4 minutes for the markets to go, and there is traction. UPL has moved to the highest point of the day, so there is traction in UPL. But apart from it, most of the other companies have actually given negative returns at this point of time. Let's take a check again on some of the counters. Eicher Motors is down almost 10% now. Ruchit, any view on Eicher Motors? Will the selling continue?
It's likely to continue, because the kind of sell-off that we had seen in today's trading session after breaching a rising trend line with a gap down, and you look at the volumes in today's session, whenever we see such humongous volumes on selling, this is a sign of negative trend, and there is a high probability of this negative downtrend getting continued on the low side, and we may also breach this 19,200, 19,400 mark, which has acted as a support zone during the month of October. So certainly not a stock where one should do any kind of bottom fishing just because the prices are down by 9-10%.
Okay, Manav, I know that we probably won't have too much data on Lemon Tree, considering the stock just listed about early last year, that's early 2018. That said, there was a lot of fundamental news which had led to some movement. But how are you reading the technicals on Lemon Tree Hotels, and any view here that you could offer?
See, the prices actually overall has been on a very good sideways consolidation, say since last 2.5 months, having important support close to the levels of 65 and resistance around 75. So the prices have right now seen a cool off from its resistance level, likely to test its lower band of support zone. So in such a scenario, I think currently the prices are in no trade zone, and only if the prices are near about 65 odd levels or 66 levels, that is whereby we can expect this price decline to go forward too, and that could initiate a short-term trading opportunity. But in all, I think taking a medium-term perspective view also, this is more or less a consolidation range and should ideally be traded only at the extreme zones. For resistance could be a sell, and support is the level where one can look to buy.
Okay, markets, we're just minutes away from the markets closing, and look at the traction that's happening. Nifty not at the lowest point of the day, but very near to the lowest point of the day. It's down almost over 1% in trade. Similar is the case with the Sensex. The Bank Nifty is closing in on the 1% mark. So across the board, there is a selling pressure that's being seen. Take a look at the mid cap and the small cap into the market and see what exactly is doing. The mid caps are down almost 1.7, 1.3%. The small cap is down 1%. So it's across the board. There is selling pressure that's been seen as far as the market is concerned. The biggest drag obviously has to be Eicher Motors, is down 9.5%. But let's start with the gainer. Sun Pharma is the biggest gainer, 1.5% higher. Bharti Infratel continues to surprise over the past few days. IT companies, TCS and Asian and Infosys do well. UPL has managed to move into the green, and Asian Paints is also trading at the highest point of the day. What is not doing well? Eicher Motors, news of its own. The entire metal package down almost 5% in trade. M&M continues its weak run from yesterday. That is down in trade. GAIL, BPCL. BPCL surprisingly, when the other oil marketing companies have managed to move up, GAIL sits down there, and Maruti and Hero MotoCorp are the other counters which are down in trade. So that's the traction that we're seeing. Agam, what are you spotting?
Well, so in the broader markets, again, a lot of traction. We can't not mention, some of the aviation companies, but I'm going to come to that. Let's start off with Chambal Fertilizers, because that's the one that stands out as one of those stocks which is losing out quite substantially. It's gaining quite substantially, up nearly 4.5%. We have KRBL, that's the other one, which is also up and about, and we're seeing about 4%, near 4% gains coming through. It's not just for KRBL, but a whole host of the other rice companies. Gulf Oil is the other one, which is also gaining, and you're seeing good traction too out there. We have something like 3% gains there. New India Assurance is the other one, also up and about, and that's up around 2.5%. Sundaram Fasteners, let's bring that one up. And that's actually declining in trade. It's down around 2%. That's followed by something like a Jet Airways, and now this is the one that we've all been talking about all day long, and well, it's down around 7%, under considerable pressure with very high volumes as well. TVS Motor Company, of course, reacting to the volumes coming through, and down 5.2%. So weakness for this one as well. This one was one of the few counters which is holding out in the last couple of days. And Lemon Tree finally is seeing some amount of profit taking after that surge that we saw after some news coming in with respect to Warburg Pincus coming in JV with one of its arms. We'll be keeping an eye on some of these counters, but on the whole, Darshan, has turned out to be a disappointing day of trade, even though we did see some amount of recovery. Let's take a look at the contributors.
Yeah, that's it. The Nifty Bank was down almost close to 1%. It'll be interesting to see what contributed to the drop on the Nifty. We were down almost 120 points, so that's the Nifty contribution. As expected, Reliance contributed 14 points on the downside. The HDFC Twins another 21 points, and M&M was down almost 7%, 7 points. Eicher doesn't have a large weightage on the Nifty. Otherwise, that could have been much more. So we were down on the losing side 140, and on the gaining side we were just 12. And that was basically some of the large caps like TCS and Infosys did manage to move up in trade. Sun Pharma did well in trade. Advanced decline also. It'll be interesting to see how that panned out in trade throughout the day. Again, it started even Steven in one time it was there, but then the gap was pretty evident which way the market was looking at. For 1:2 was the advanced decline ratio.
Well, since we were talking about the advanced decline ratio, I would want to pull up the Nifty heat map as well and see how many of the Nifty stocks ended the day in the red, because at one point in time the picture was looking a lot grimmer, with just about 3 advances against, well, possibly 57, 58 declines. Eicher Motors and JSW Steel is something that we've spoken about, followed by downgrades in Tata Steel and Vedanta as well. On the gaining end, of course, Sun Pharma and TCS, perhaps the only 2 stocks advancing by a little over 1%. And finally, if we can just take a look at the turnovers for today and see whether or not that has seen considerable traction. Actually, there has been a pickup from what we've seen yesterday at 11 lakh crores in terms of the NSE F&O, and cash turnovers are also considerably high compared to what we saw in the previous 3 weeks.
I think people are back in office, that's why.
I reckon, yes, I'm sure. Well, so there you have it. That's what, as far as your markets are concerned. But I'm going to come back to our technical experts. Manav, we've seen the Nifty close just shy of the 10,800 mark. Your closing thoughts right now?
I think, like I mentioned, this could be an overall consolidation phase, which we could see in the month of Jan. On the upside, 10,900 to 11,000 would be the resistance, and 10,600 would be the support range. But looking at the overall structure, I think as the prices come near the support zone, it could provide much good opportunities to get into some of the stock specific approach. And there are a lot of positional strategies could be initiated in the month since the prices are nearing to its support zone. So I think overall structure still remains bullish. We expect this outperformance to continue, and led by the private banks. So Axis Bank and ICICI Bank could be the stocks to look out from the Bank Nifty for this month.
How about you, Ruchit? What's your closing comments on today's trade?
So if we see last 1 month, the markets have traded in a range, and within the range also we have seen a lot of volatility. So until we come out of this range of 10,600 support or 11,000 on the higher side, I think it would be prudent to focus more on stock specific move. Just 1 day of correction today by 120 points does not change the broader trend or does not turn the trend negative. So as of now, we are into a consolidation phase. Existing long positions in the system should be held on the index front with a stop loss below 10,600 mark. I would turn bearish only when we see breach of this lower end, that is 10,600. Otherwise, more likely we are likely to stay in this consolidation phase of 10,600 to 11,000.
Fair enough, guys. On that note, I'm going to take a moment to thank both our experts, Ruchit as well as Manav, for joining us and taking us through their views on the markets. And on that note, it's a wrap on this edition of The Countdown. Of course, this is a thank you from me, Darshan, and the entire team. But don't go anywhere. On the other side of the break, we have the market wrap for you. Stay tuned in.